All right, guys, welcome to the Investor's Guide of Memphis Real Estate. I am your host, Dean Harris. I'm the Vice President of Sales at CrestCore Realty. I'm joined by Douglas Skipworth. How are you?
Great, man.
Good. You're our biggest client. You eat all the cooking. Everybody's kind of used to that now. So let's get started. I'm going to jump right into this podcast today. We are in an interesting time.
Yes.
We are navigating through some, rough seas, so to speak. But I will tell you that we are still selling houses. A 30-second, kind of update on our market. We closed over 20 in October. We've got right at that number for November, and we're probably going to surpass that in December. So if you guys are listening and you're wondering if things have come to a screeching halt, no, they haven't. Nope. People are still buying rental properties, investment deals, and we're still seeing deals come across. We're actually seeing more. So you can be a little bit more particular on what you're looking at. I had a call right before I came in here to do this that, he said, hey, should we go ahead and move on this one? Or do you think other options? I was like, man, if the numbers are close for you, let's wait. I go, there's some other stuff that's coming. So any questions on that, let me know. Dean at crestcore.com. I can set up a call with you for there. Today, we're going to talk about creative financing with high interest rates. That's relative, isn't it?
Good. That's good.
Yeah. So it's a topic that I'm getting a lot of calls on. I'm getting, hey, Dean, are you seeing owner finance deals? Are you seeing this? Are you seeing that? And truthfully, not just yet, but I thought the topic would still be good and relevant today because I think over the next few months, we're going to see some of that stuff. So let's talk about creative financing. What's the first thing that pops into your head when you hear the word creative financing?
I guess kind of headline, it's, a little bit on the MacGyver side, it's a little bit of horse trading.
Yeah.
It's when times, unique times call for unique measures kind of thing. So that's kind of where it comes from in my mind. We can unpack it and do a lot because I've done a lot of creative financing over the years on both sides, buyer and seller. But, I go back to kind of the beginning of like, hey, when you're buying, it's either a cash transaction or a credit transaction. You either have cash and the property is not collateral. So you're able to walk in there and you don't have to worry about appraisals. You don't have to worry about lenders. You don't have to worry about anything. It's a cash purchase.
Yep.
That's rare, but there are times and ways to do a cash purchase, and that's awesome. As we all know, that's the way to get it.
Yep.
But when you come to a credit side, that's when the house is the collateral.
Yep.
So that's like, okay, now how are you working with the house being the collateral? Typically, traditionally, a bank, a mortgage, pretty typical. But I think what we're saying is like, these aren't typical times. We've talked before, this world we live in real estate swings from unsustainable optimism, where we were oh man, this is unbelievable, to unjustified pessimism. I don't think we're to unjustified pessimism yet.
No, I think it's adequate. I think we're where we should be.
We're where we should be. It feels good. But as that pendulum swings back and forth, we've seen banks over the 2 decades we've been doing this, we've seen banks, they do the same thing. They go from unsustainable optimism. They'll loan you an umbrella on a sunny day, and then they'll take it back on a rainy day.
Yep.
And it's just like, wait, what
are we doing?
What are we doing? So, and I've talked a lot about lenders. And so that's where the creative financing comes into play. I know we can talk about owner financing. We can talk about hard money lending. We can talk about private lenders. There's a lot of different things to unpack here. So I guess that, to me, that all tees up the creative financing conversation. That's what I think of as like, all right, in these uncertain times, things are a little different.
Yeah.
I'm gonna do MacGyver on everybody. How are we gonna do some good old horse trading? Where we're gonna work this deal out that benefits both of us.
When do you usually, like in this time, I guess let's just talk about owner financing first. So in a time like this, I'm getting some clients that are more interested right now in owner financing. I assume because they believe they can get a better deal from a private owner than they can go into the bank. Is that the way that a buyer should look at it?
And I think I like that. I guess I back it up. So just for the viewers out there who don't know, when somebody owns a property and they go to sell it, they're looking to get cash for that property. They either have a mortgage to pay off, or they might own it free and clear.
Yep.
If they own it free and clear, there's a lot of options. Even if they have a smaller mortgage, so that they can pay that mortgage off. So if an owner owns it free and clear, they can be the lender.
That's right.
To the buyer.
They now turn into the bank.
And from a seller, you're like, why? Well, from a, I guess, buyer would look at like, why would a seller want to do that? Why wouldn't they just want all the cash up front? Well, in my experience, that if you offer owner financing, you get a lot more buyers who are, and we can talk about why, but you get a lot more, as a seller, you get a lot more buyers.
Yep.
Or buyer looks. You can command a higher price.
Yep.
Because you're providing more value to a buyer
yep.
than to a cash buyer. So you can get a higher price. Potentially, you can delay the recognition of the sale. So your taxes, it can be an installment sale so that you're not paying all your capital gains up front.
Yep.
It's kind of pushing those out into the future.
Yep.
You can, as a seller, so these are all seller benefits, you can get, like, say you're selling a $100,000 property.
Okay.
Mr. Seller, what are you going to do with that $100,000 today?
Yeah.
Different options. What if you're just going to turn around and reinvest it?
Yep.
Oh, I'm going to put it in a CD for 3%. Well, what if you loan it to me as a buyer for 5%? What if I pay you 5% interest?
Yeah.
Or more. Or so there are a lot of benefits to sellers.
Yep.
To use owner finance and seller finance and whatever you want to call it, carry the note, the owner carry back or carry it.
And from the seller standpoint, is if they're not receiving that lump sum of cash up front, then they're not paying the big tax note on there, and they're keeping their property. Essentially, they have the lien on it,
and they got a lien on it. It's collateral. They know the property. They can take the property back. They can get some it. Some require a down payment, 10%, 20%, 50%, and carry back the note. 80% carry back the note.
Yep.
So, or 100%. So it depends on, I've done it all kinds of different ways. So where 100% seller financed to, hey, Mr. Seller, I'm working with the bank. This is a big deal. I can't get everything. I'd like to go get a bank loan for a portion of this loan, of this purchase. And will you carry back a second mortgage? And then I don't have to bring cash as a buyer to the table. Seller's got his big lump sum up front, then's able to get a little return on this other.
Do you have issues with banks wanting to get in that position?
The bank doesn't care.
Yeah.
In my experience, the bank doesn't care, especially if you explain it to them. And we could get into this conversation later, but the bank's in first position with an 80%, 75%, 65%, 50%, whatever you do. So do they like that you're fully leveraged on it? Some might question it, but it's easily explainable if you know what you're doing and you say, hey, as a buyer, I'm conserving my cash, or
this is the reason why I'm doing this.
This is why I'm doing this. The value is such that I'm still, under leveraged. You just don't want to over leverage it. Like that, we're never telling people to over lever their property or borrow more than the property's worth. That's not what we're saying.
No. And oftentimes the sellers in this situation can get a little bit, so the advantages on both sides is kind of where I'm going at here. The seller can possibly get a higher price.
For sure.
Their terms.
They're adding value.
Yeah. Their terms, and you're coming over here to buy and you want an owner finance deal. The buyer, it's kind of like, hey, you lose a whole lot.
Scratching my back.
Yeah, you're kind of losing a little bit of your leverage as far as give me this deal. You're needing a favor from the seller. In all likelihood, you're going to be on the short end of the negotiating stick.
Correct.
Within reason, you're going to have to accept whatever's going on from that seller. The buyer end doesn't go on your credit.
Doesn't go on your credit.
No debt to income ratio. It doesn't involve that. What are some other advantages for the buyer?
You said that banks, no credit, potentially no money down. If you can work with the right one, you can get more favorable terms, less of the body strip search, body cavity search. I mean, you don't have to do the whole dog and pony show. It's usually just at closing. I
Here's
mean, it's
another
just
one.
it's a lot easier to do. Go ahead.
Here's another one I've thought about. So when you go to a local bank here, let's say I have an owner finance deal from you. All right. You own the property. You've owner financed it me. We've got terms. I've kept it for a year or two, and I've got a tenant in there. Now I want to get off of the owner finance, and I like to put it on some more permanent. The rate's lowered or whatever it may be.
There you go.
It is a much easier process to go to a bank and say, I want to refinance a property than it is a brand new purchase.
For sure.
So your
That's
conversation.
that's awesome.
Yeah, you're
That
with
is
your
awesome.
bank. They say, oh, you have a property, you've established it, it's renting, you fixed it up already if that's what you were going to do. You go to the bank and you want to refinance. I've had banker after banker tell me that it is much easier for them to get a refinance approved versus a brand new loan. That's right.
100%. Yeah, and that's great. And we talked about that before. You marry the property, date the rate. So it's like when it becomes more favorable for you, go do it. And what we've seen at times as well is if you can structure the deal. I mean, this is why I'm saying MacGyver, because there's so many different ways to do it. I've had a deal before where got a bank first mortgage, paid the seller 65%, seller took back 35% for 5 years on both those deals. And then when it came time for this property, this loan ballooned like on a 515 or something with the bank, the properties appreciated, there had been pay down, and we were able to then refi the seller out of that. So it's like the seller was happy, the bank's happy, the buyer's happy, and no money down. It was a great situation. Doesn't always, can't always all those factors do that, but it's seen it where it's just a great works to everybody's advantage. And I'm not seeing, I mean, just because I don't want to give people the wrong impression right now. I'm not seeing a whole lot of the owner financed offers being accepted. For sure.
Matter of fact, I don't know that I've had one accepted. I have one or two guys that are offering it right now exclusively, and we're not getting it now. I don't think we're in quite the market position yet for sellers to get desperate to where they want to move a property. We are getting there.
But yeah, and again, they're different sellers, different things. Like I'm always ask, is seller financing an option for anything, whether single family, small multifamily, commercial, because you just don't know the owner's situation. What are they going to do with their money? Are they going to put it in the bank? Then maybe they want a little bit of a return. Yeah,
this is going to be relevant soon. And there's so many advantages so many advantages for both sides. I don't disadvantage. I mean, if you can get someone to agree to it with the right terms and you can make it work, I don't really know what a disadvantage would be. I mean,
the only time I've seen it hard for sellers is because they have a mortgage to pay off, and it's that $100,000 they can't tote the note because they got to go pay the bank themselves, or they have an immediate use and need of that cash.
Yeah.
So they have other bills to pay or other things they got to go do. Otherwise, it's a great option. It's a great option.
Yeah.
You have done it tons and tons of times.
I have not yet.
I highly recommend it. It's great. It's been very, I have not had a bad experience, both as a buyer and I've done it as a seller with properties that you couldn't, for whatever reason, couldn't move, needed to widen my buyer pool, and got pays every month on the 7th.
I was on the verge. You and I talked about a month ago. I was on the verge of one, and the seller kind of he backed out of it kind of last second, but it's coming. It's coming. These guys are getting more and more intrigued with the idea, especially as things slow down and the rates creep up a little bit more. I mean, it's stalling them out.
Yeah. And because the banks, as they swing that pendulum and they get nervous and scared. I talked to a banker a couple of weeks ago, right before Thanksgiving, and he said one of their good investors was buying an office building, and they were only willing to lend 50% of the value.
Okay.
And the borrower didn't. It was a non-owner occupied building. It was just a rental, and they didn't want to loan more than 50%. And so he didn't do the deal with them.
Right.
So the seller, right? The seller goes, oh, shoot. My buyer couldn't get their financing with what they wanted. So maybe I'll do seller financing.
Right.
So with the bank, so it's not just, it's a lot of factors because of the higher interest rate and the way the banks, that pendulum that's swinging back and forth, and the banks get
Antsy,
and they want to look, and they're a herd mentality. So if one bank does it, all the banks do it.
Yeah, because they don't want to stick out and expose
And they got
themselves.
regulators, and the regulators are looking at all the banks, and they got ratios that compare each other. So they know what they're doing, and they don't want to be an outlier.
No. All right. After owner financing, then our next thing was hard money, and hard money is a tool I've used.
It's a great tool.
I don't know, 30 times probably. I mean, I've used hard money a bunch, and we have a sister company, Corlin Financial, that is a hard money lender here in the building. So we have access to this. Let's talk about hard money. The rates are high. It's expensive. We've never tried to say that it isn't.
No,
you just have to learn how to use the tool.
It's a tool, and many benefits. The best, one of the best, is the potential for no money down.
Yes.
So that helps people. And again, one of the best things, and I guess when this just the pause on, hey, why is no money down important, right? To me, no money down is important for 3 reasons.
Okay.
Or low money down, because number one is you leverage your return. So your cash, you're putting your cash and you're optimizing its return by leveraging that cash instead of paying 100% cash.
Yep.
And the return is not as great as if you leverage it. Now you got to leverage judiciously, wisely, be careful.
Yep.
So your cash return. Second is like, I have yet to meet somebody with unlimited cash. There are people who have more cash and there are people who have less cash, but there's nobody who's got unlimited cash. So this is a capital intensive business. So you can buy more with leverage. And then the third, which you and I talk a lot about, is to conserve your own cash. Save it for a rainy day, dry powder, just whatever you want to call it. You need that. You need to have access to cash. And so the less money you put down, the more you have here for a rainy day or for an opportunity or whatever. So anyway, that's why people are using credit. That's why hard money is a good tool.
Yes.
Because with hard money, you can potentially not have to use your cash, and you can leverage your return. You can buy more than you could have.
Easy refinance.
Easy. So most people, as you know, do hard money. They do a quick transaction.
Yep.
Almost like a wholesale kind of deal. We fund it, double close.
Yeah.
That's not as widely used. The 3 most widely used for hard money, or I guess the 2, and then a third. The 2 are fix and flip loans.
Yeah. So
a short term, get in there, no money down. I'm going to buy it. I'm going to borrow all the rehab funds. I'm going to be in it, and I'm going to sell it. I'm going to pay the bank, the lender, my proceeds, and I'm going to keep the rest.
I've done that with Corlin specifically half a dozen times.
And you can do no money down, infinite return. It's a great way just to create money by sweat equity, adding value, all of those things.
Yes.
And the second one is a bridge loan. You buy a property, you want it for a long term, but you buy it, you do some fix up, and you go refinance it. Like you just said, like that is what the bank loves to see. They love to see you go in and say, oh, I purchased this house, I fixed it up, I put a renter in it. Would you long-term finance this? Absolutely. Would love to.
It's how I got started. This is how I got started with my rental portfolios. I started using some hard money, and then we used some private money up front. But I scaled by using hard money up front.
Yeah.
I didn't have to put any money down to get into it. I got everything fixed up, tenants occupied. I went to the banks, and because I bought them right, they refinanced it, and I still didn't have to put any money down. So it's that's right. That's the way to do that. Don't ignore how expensive it is. Ignore whatever stereotypes you have about it. Look at it as a tool. Use
it's a tool. It's like paying a wholesale fee.
Yeah.
It's like paying a real estate agent fee.
Yeah.
It's like paying property management fees. It's part of doing it, getting the deal that you want, factor it into your numbers, and make your numbers work. And if the numbers don't work, don't do the deal.
Don't buy it.
Don't buy it.
You've heard me say this 20 times, and I'll say it again because I think it's the mindset is what's so important. But at the end of the day, and what I mean by the end of the day is when the property's paid off, that's the goal here, right?
You're not going to.
Am I going to sit here and go, wow, man, that money I paid Corlin to get this thing started, I wish I hadn't have done that. You're not going to care make sure that it fits into your payoff schedule. Make sure it fits into the numbers and have it work. The key to this is buy right. You have to buy right. And if you don't, then it's not a tool. It's it's something that's going to hurt your business. So buy the property right. Use your hard money to get in there. Use the hard money payments and get the thing refinanced and move on. I mean, I'm not exaggerating. I think I did it on my first 10.
Love it.
I mean, and when I went to the banks, what was their response? Dean, you don't have any investment property. I own 4 or 5 here. I'd like to refinance them into one loan. Oh, well, let's look. And it was easy peasy. Ever since then, the banks you can open up that relationship that way. And it's an easy way to get in the door versus knocking and saying, hey, I'm Dean. I'd like to borrow several $1 million over the next few years to go build a portfolio.
Yeah.
I already have one. I'm working on it. I've started. I'd like to start working with you. I'm amazed at the reactions that I get that are different. The first one, I want to start this. I hope you have a ton of cash in your bank. We want to see a ton.
Yeah.
The other one, I have property here. It's almost as if they don't even think of it, right? Like they're going to get all that information from you, but it's not the first thing that they ask me. It's not the first thing that they think about. It's the properties and how can we get them in here because they already know that refinance is easy.
Yeah.
Love hard money. And there's plenty of companies. I would dare to say that any of them are better than Corland.
And the only other thing I would say on hard money is what we talked about. There is a long-term product so that again, it's there for different reasons why people, and you've done that before. We get a hard money long-term loan.
That's what I did with these first rentals.
Yep.
My
and then what did you do?
Flips.
And then you just go, when the time is right, then you refinance them. So it's not.
I paid a high rate for 6 months.
6 months or to 60 months, from 6 to 60 months. It just depends on what you want. When the rate comes, when the situation changes, whatever reason, you can lock it in a longer term rate and put it on a amortizing, pay it down, monthly payment, pay at principal and interest. So that's an option too. It's not as widely used because it's a little bit less traditional for hard money, but it is a tool that is out there. Kind of like the transaction in the long term. The fix and flip and the bridge loans, those are the bread and butter of hard money. But long-term is an option, especially now. We've seen a lot more people as the traditional banks aren't willing to do it, or they're lowering their loan to values, or they're making all the requirements harder and harder for borrowers.
If you're a buyer and you're low on cash, or don't want to use the cash, and want to get into real estate, hard money is the way to do it.
For sure.
Hard money is the way to start buying rentals and get them and then go refinance and get out of there. But that's the way to start it.
That is the way to start it. Unless, and I think you were going there, unless you have access
to cash.
To cash through a private lender.
So let's move to private lenders.
To a private lender.
This is also where I started.
Correct.
I got some loans from a private lender right up front. Favorable terms.
Yep.
It's easy to do.
It's super easy.
Your title company or your closing attorney can create your AM schedule and have everything recorded properly and done right. And I've done that as well. So let's talk about private money. Same reason you would use a hard money loan or even owner financing. This is just another route to take. You got that uncle with a bank full of cash that he doesn't know what he's doing with it. It doesn't have any. This is a way to do that.
Friends and family who have access to cash and are looking for a return. Or it could be somebody who's access to cash, like you just said, who wants to see you succeed. They're just your fan. I mean, it's rare, but I've seen that. I've seen people who want people to succeed, and they will give them a loan. They will do some way to help them get started.
More on this one than the other two. I think you need to have your stuff together. Meaning,
for sure,
Corland. I mean, hard money and owner financing. I don't believe they're going to look at your business plan and your future as much as a private lender would. Your uncle knows you're a knucklehead, right? He wants to see the business plan and he wants to know what's going on in the bigger picture more than likely.
Yeah. And I was going to say the flip side is that person's more invested in my experience. That private person is more invested in you. Yeah. They want to see you succeed. So they want to see your plan to succeed.
Yes.
But they'll help you. And whether they have access to cash that they can loan you, whether they have some type of collateral you can borrow against. Mm-hmm. So they are there as a private lender. It could just be an acquaintance who is in this business to just do some private loans at a favorable rate to the right person. So it's a great tool. It is not scalable, maybe.
Unless that person's super deep.
Correct.
Yeah.
You know, or you could potentially do just one transaction at a time, buy it, then refinance. Again, part of what this is, the beauty of this in a private lender is it's quick and easy. And then you go refinance it with the bank. And then you come do it again.
Let me give you a scenario of a client that I had. He started this. He went to, I believe he said his grandparents.
Yeah.
Asked them for $200,000.
Okay.
He was going to pay interest on, this might not be a deal for everybody, but I'm just telling you what he did.
Yeah.
He asked for $200,000. He was going to pay 5% interest on it monthly, using it or not. Right. So, so the advantage for them was, hey, you're going to immediately start getting payments now.
Then it's a CD.
Then
put
it's
it in the
CD.
bank for them. They just put it in the money.
That's exactly
put it in the
right.
bank and they're getting the interest.
And he did the burr strategy, I believe 11 or 12 times with their money. So he was able to burr. And what I mean by burr, so let me explain that. Is he used their money. He used the private money's lender's money to buy the property, rehab it. And then he went over to the bank because you've heard me say 5 times in here, it's much easier to get a refinance.
Yep.
So he went and took that to the bank, refinanced that one, paid this
and paid that loan,
paid this loan back, and he did it again 10 more times. I think he did it 11. Then he had a portfolio size to where he could go to a bank and say, "Hey, I'd like to borrow against this because I have some equity." And I think he told me he put 50 grand into an account that gave him a little line of credit, and he's moving on. This is important because the guy's a fireman.
Yes.
And does not make a ton of money. Bless that guy for saving our lives and what he does.
Sure. Love it.
But you would automatically think a fireman is not a super wealthy guy. And how in the world could he afford to buy 10, 50, 20? I just told you. Because banks are not necessarily looking as hard at you if you own the property. They're still going to dive into your personal stuff. They're going to see. But if you've got a business, which his 11 properties is a business.
100%.
He can then go to them and start creating that relationship of, I'm an experienced investor. I know my business is running right now. Let me continue this with you. And sure enough, they gave him the thing and he's still running with it. That's a great example of really not just private. You can use any 3 of these that we've talked about.
And that's what I was just about to say is like that. Take that example, extrapolate it, run different scenarios. Maybe it was 300,000. Maybe it was 100,000. Maybe it was a line of credit. Maybe it was somebody using a credit. Maybe it was the dad. Maybe it was a sibling. Maybe it was whatever, hard money. The way you just described it is the way I have seen so many people do it, and the way I did it myself. With a home equity line of credit, borrow, burr it that way, and then you just build a business that way. So yes, that is the exact template, and it's just you just interchange what who the lender is.
That's right,
and how much the amount is.
So if you come to me and tell me you don't make a ton of money, but you'd love to get in real estate and you just can't, then you're not informed. Because I just told you of a guy who probably makes 60 grand a year who owns now 11 properties that are all over 100 grand. He's got $1 million worth of real estate.
Right.
And he's sweet guy, smart. But I mean, we're not talking about somebody super wealthy. So I don't want to give that. This is kind of the reason why I did this today. It's like this opens up the doors, these 3 things, for more investors to get into this than I believe that they're aware of.
And part of it, for sure. And part of it is because of the times we're in right now. People are open to more. The stock market is volatile. Bonds are volatile. Interest rates at banks are here. We don't know.
Yeah.
So people like that person's grandparents. Maybe there's somebody in the family, but so that are open to this right now who might not have been open to it 5 years ago when the stock market's going.
That's exactly right.
So I mean, it's just a great opportunity, a great tool. People should use whatever they can. And that's what I would say about the fireman is my bet is that the grandparents didn't say, "Hey, we've got $200,000. Would you go figure out how to give us 5%?"
You gotta ask.
You gotta ask, and you gotta just kind of look at your social network, think about who it is, and you're not a con man. You know, you are trying to work a deal for them that is in their interest and your best interest. It is really adding value. So it's like, who do you know who could benefit from a situation like that based on who you are? Somebody who's probably already your fan.
Yep.
Could be an old coach, an old teacher, an old family member, somebody you've known, a friend, a friend,
a wealthy colleague,
a wealthy colleague, a friend, a parent that you knew growing up, whatever. There are all kinds of ways.
And if you tell them that you give them that business plan to go with it and show them, and I can help with any of that stuff and a plan in place to show them. He did tell me here, because I asked the question, I go, were your folks, your relatives reluctant? Like how did they? He said they asked a lot of questions, but once I showed them what I was doing, I told them I was in contact with you. I gave, he gave the whole story of what he was doing. They didn't have any issue with it.
Yeah.
I mean, they really didn't. I mean, and it takes the right person that can kind of take that risk with you, but they had no problem with it. I think what you said a second ago is the greatest. Like they're not going to come up to you and say, "Hey, I got $250,000. Can you find a way to make me some money on it?" I mean, you got to ask, and you got to be prepared. And be prepared for no, but also be prepared to
answer their questions.
Answer their questions, and don't sound like an idiot. No. That's the biggest thing.
Yep.
I didn't think of that. What they're going to ask you. What are you buying? Where? What's the return? All the other stuff that they're going to want to know. One other thing I want to mention that I wrote down here that I think maybe should lead everything. You're not buying, what is it? Marry the property and date the rate. That ought to maybe lead this whole thing out.
There you go.
Because that is the truth. I mean, like if you're thinking now, God, I'm not going to buy now. It's 7.25. Yeah. For how long? So it goes up to 9. Well, then
aren't you glad?
Then congratulations,
you bought
7. Or if it goes down to 5, well, then refinance the thing. It might cost you $1,500, $2,000 to refinance it. So refinance it and get it back down. I am not pausing my buying. I'm not pausing my business. I am encouraged by less buyers in our market. I'm encouraged that we're seeing, had a guy call me this morning. "Hey, Dean, what's going on with the market?" I was like, "What do you mean?" "I'm getting way more properties from me. There's way more coming through." I'm like, "Because there's less buyers in this market." I've been telling everybody, there's still people buying. You can just be a little bit more particular on what you're buying.
Yeah.
If I called you 6 months ago and I said, "Hey, there's a red hot deal right here. You better act." What I meant by that was in the next 30 minutes. Now, if I'm calling you, I'm saying, "Hey, there's a really good property over here. We need to act." I mean, in the next 48 hours, right? Like you need to do something, but hey, you got a little time to decide. It was a wild west in the spring of this year. It was, buying right now.
Unsustainable optimism. Yeah, it was crazy.
I wanted to bring this topic up. I think this is a good show.
No, this is great.
Owner financing, hard money lending, and private lenders are some ways that you can go obtain properties now and stay out of the bank's hairs of that high interest rate for long term. Understand kind of how we broke these 3 down. Anything else you want to add to these?
No, man, I love it. That's great.
Thank you guys for listening today. If you have any other questions, dean@crestcore.com. My email's at the bottom of the screen. Reach out to me. I'll be happy to touch base. See you again in a week.
Yep.
Okay. Thanks, guys.